All right, let's begin with the sage of Omaha, Warren Buffett, Berkshire Hathaway, selling off on their holdings in Apple over the weekend. They released a Securities Exchange disclosure showing that they had actually reduced their holdings, selling about 390 million shares of Apple in the second quarter of this year. 115 million were sold in the first quarter of this year. That increases their, get this, cash on hand to $276 billion with a B. That's cash, ladies and gentlemen. Berkshire still holding about 400 million shares of Apple. Many are saying that Berkshire Hathaway, particularly Warren Buffett, they're seeing a slowdown in the future, and that's why they're selling off. Remember, they sold off on their BYD holdings as well. We reported that. Let's get to oil markets. Oil markets falling to levels not seen since January of this year. The U.S. job numbers had an impact there. We also had slowing numbers coming out from China. But, with the U.S. pushing Navy ships over to the Middle East, with Iran saying that there's going to be a reaction to that assassination in Tehran from Israel, killing one of their the heads of one of their units, that means that oil could be volatile in the near term. We'll be watching that. Let's get to Asia. Honestly, we should have put it at 4 o'clock. I'm going to put a picture of Godzilla because that's the best reaction here. Early in the morning, look at this. The Nikkei 225 falling to levels not seen since probably between COVID and Black Monday 1987. The Topix 12.7% drop. The Kospi had to be halted. Trading had to be halted in Korea because of how far it fell. The TAIEX in Taiwan, the Hang Seng in Hong Kong, the S&P ASX 200 in Australia. Everywhere, markets falling. Let's get to the United States. Goldman Sachs and JP Morgan raising their recession probabilities for the US markets. Here is a research that released this morning from Goldman Sachs. We've increased our 12-month US recession odds to 25%. The premise is that job growth will recover in August. FOMC, that's the Federal Open Market Committee, they could reverse things with a higher interest rate reduction. They said if we're wrong and the August employment numbers are as weak as July, that 25 basis point cut could be 50 basis points. Now, JP Morgan, they're saying it could be a 50% probability of a recession. This is a U.S. head of U.S. JP Morgan, chief U.S. economist, says now that the Fed looks to be materially behind the curve, we expect a 50 basis point cut at the September meeting, followed by another cut in November. He continues in this research note that was released, saying indeed a case could be made for an inter-meeting easing. They could come before the meeting, especially if the data softens further, although Fed officials might worry about how such a move could be misinterpreted. We got to put all this together and talk to our guest, Kingsley Okereke. He's the head of Securities Dealing at Zedcrest Group. Kingsley, save the global markets for us. What do you make of what we've seen from Thursday last week to Friday to this morning? Absolute bloodbath everywhere. What's happening?
Okay, let me just start from the Asian front because I think that's where the redness is pretty much.
Yeah. Okay.
It's pretty much obvious. Okay, so for the Asian market, I think it all started with the DOJ's move, the 15 basis point hike, and for them, they were looking at inflation concerns and weakness in the currency, which is why they went for that move. Initially, when they made the pronouncement, markets, just greeted the news, calmly and all that. But I think it was on the back of the DOJ's chairman's speech, which was pretty much hawkish, leaving the door open for more interest rate hikes that pretty much spooked markets. And you saw the Japanese yen lose some value there. But coming on the back of that, when we saw the job numbers, we saw
in the US.
In the US, initial jobless claims moving up to about 249,000 from 235,000 in the prior month. You also saw unemployment numbers tick up to 4.3%. And you now saw the number of jobs added was just about 114,000. So pretty much all these data, coming together showed a bit of weakness, and that pretty much drove, the weaknesses that we are seeing, across markets. Markets were red in the U.S. We saw the S&P, Dow Jones. None of them were spared, with the Nasdaq losing the most value. I think that was 2.5% on that. And we still saw that the nickel continued to lose value even coming into today. Unfortunately, the currency has strengthened.
Right? That's the yen, right?
Yeah, the yen has strengthened. Because, with all this kind of global turmoil, naturally that's a safe haven asset. So you tend to see all those kind of things. And besides, the US dollar has also weakened, given all this negative news. And you've come to see a couple of people come out to say, you know what, I think there might be some recessionary concerns here, and you see Goldman and JP Morgan coming out with their revised review.
So excellent. Thank you for the breakdown. So there are whispers that Japan could hike rates again at their next meeting. So if they do that, what do we get more of the same as far as the market reaction? What could happen if they cut again? Oh, no, hike again. Sorry, not cut. Excuse me. If they hike rates at their next meeting, the Bank of Japan, then what could we?
The natural effect is you see equity prices lose more value.
Yeah.
Right. I think already what market usually thrives on is expectations. So they try to even factor that in, you know, as things progress. So equity will lose more value, and also what is also significant is that the DOJ is also going to halve, you know, their bond purchase program, so about 3 trillion yen by March 2026, and they are the most significant buyers of their bonds over there. So basically, it just paints a very gloomy picture. You're looking at the Asian front, and you know that China is trying to reflate its economy. They're trying to roll out a lot of economic stimulus in that regard. We've not seen as much success, you know, and we are still waiting on that. And that is weighing on oil, because China's oil demand has also, you know, dampened in recent times. Part of the reasons why you see oil, you know, looking, you know, much more shaky, even though we know geopolitical tensions are the overriding factor in that regard, and that is pretty much playing a significant role in how market moves in that space.
What a year! It's just everything. Bitcoin, everything's falling. Even Israeli stocks falling this morning as well. Okay, so to the U.S. Do you buy into what Goldman and JP Morgan are saying as far as them increasing their probabilities of a U.S. recession, touching on the jobs numbers and everything? You think that's there are even political implications for that with the elections coming up? But what do you think? Do you buy into that?
Yeah, there are legitimate concerns, but for me, I just believe that with U.S. GDP numbers at 2.8%, right? I think I'll more look into the data to be able to see. I don't really think, in my view, that the U.S. would enter into a recession. If at all recession concerns should pop up, it's going to be next year. But for now, I do not think so. But I think the Fed has also said that it remains responsive. If there is any need, it would take decisive action in that regard, and by that we mean rate cut. So if we start to look at the data, and the data comes a little bit more weaker, again, PMI came out, and those came out at 49 percentage points, which is in contraction territory. So that, again, is part of the reasons, because, you know, all these labor numbers are lagging indicators.
Right.
So which is what is giving people concern that if the data is printing this way, it means that we could see more of such weaknesses. But I believe that things will stabilize. I don't believe that the U.S. will go into recession just yet.
Now, because JP Morgan is suggesting, even I think it was Elizabeth Warren, the senator from Massachusetts. Now, she's never liked Jerome Powell, but she put out a tweet saying that they need to leave their vacation and come and cut rates early. And I think JP Morgan has spent that. If they were to do that and come ahead of schedule and cut rates before September, what kind of message do you think that would send to markets?
Well, it might send market in a bit of a panic mode, because for them, they would think that, maybe the data is actually worse than they actually thought. So, and that is what is stemming or prompting those kind of actions. But by and large, I think the Fed stands ready to do what's necessary. I don't believe that it is full panic on stations yet. I just believe that, yes, it's a note of concern, and markets should just view it as that and continue to look at the data to see if this weakness will be sustained. But for now, I just believe that markets will find its level, and we'll gradually see some leveling off in this risk-off sentiments that we are seeing.
What do you make? I should have even asked you this. Warren Buffett, Berkshire Hathaway, selling off their equity holdings. I mean, they still hold a substantial amount of Apple stock, but they sold that. They sold BYD a couple weeks. That's the electric vehicle maker in China. Folks are saying that, well, if Warren Buffett is selling his stocks, and that suggests that he's seeing some bad things on the horizon. So what do you mean? Is that just portfolio rebalancing, or how do you see?
Well, the truth is, if you go back, if you look at news that came out last week, and also some concerns that I even have, is that we had this AI frenzy that blew out of steam, and stock valuations, especially in the tech space, in magnificent proportions. And obviously, people are coming to realize that, the potentials of AI will still take a little bit more time to still yield the dividend. And companies like Apple has invested a lot, even, Microsoft and the likes have all invested a lot in artificial intelligence. So I think people are coming to realization that, we need to reduce or balances our expectations with AI. Yes, also, you also can join it to this recessionary issues that we are starting to rear its ugly head in the U.S., because everybody felt that the resilience in the U.S. was strong enough to be able to engineer this soft landing that the Fed has kept hitting the nail on, that they'll be able to achieve it. And I think with Powell's speech, Powell has said he stands ready, to be able to do what is necessary to be able to stem the tide in that regard. So I also opine that China is weak, so cutting, exposure to China, I just think it's just trying to rebalance and reduce his exposures, and trying to look at, because for Warren Buffett, if he doesn't see a significant upside in your valuation going from where he stands, I don't think he'll want to commit more cash, and obviously I'm sure it's their latest review that must have made them, to reduce their holdings on these AI bets that they are making, and technologies being the future for the global economy.
Fantastic. All right, so Kingsley, we put all this together. Asia, US, Warren Buffett, markets, oil, What does that mean for emerging markets, for us here and other emerging markets? What's the forecast, I guess? How do you see it all impacting,
Yeah, well, for emerging markets, it also means that risk of sentiment, that contagion effect will spill over here. We've seen Egypt, we've seen Angola. In fact, for Friday, all Eurobonds were all in the reds as well. And for some of these Eurobonds, for specifics, Ghana, Kenya, and even Nigeria, we had youth restiveness and civil unrest, that adds a bit more concern, to the whole space. So they'll be pulling out, they'll be seeing funds, reducing exposure to EM largely. But what I would say, the rate normalization is positive for this space, because it means that debt servicing becomes more cheaper, and some of these countries that couldn't access the Eurobond market before will be able to readily access the market now. But it's just about making the right judgment call at the right time to access the markets, such that you can gain positively from such a rate reduction.
Kingsley Okereke, it's a pleasure having you to share your in-depth knowledge on global markets and what all this means for us. We really appreciate you joining us. Head of Securities Dealing at Zedcrest Group. Thank you so much for joining us. Appreciate your time.